After studying this module, you shall be able to know the concept of offshore financial centers, that is OFC, learn about the history of offshore banking centers, understand the functioning of OBCs, analyze the trend in the growth of OBCs. The concept of offshore financial centers. The term offshore represents the area located outside the national boundaries. The concept of offshore financial centers generates from offshore finance. The provision of financial services by banks and other agents to non-residents is termed as offshore finance. Financial services comprise borrowing of money from non-residents and lending to non-residents. This can take the shape of lending to corporates and other financial institutions. This can also be structured in the sense of taking of deposits from individuals and investing the proceeds in the financial market elsewhere. The term offshore financial centers or OFCs was coined in the 1980s. Any financial center where offshore activity takes place is known as OFC. An OFC may be defined as a country or a jurisdiction which provides financial services to non-residents that is inconsistent with the size and financing of its domestic economy. However, financial centers differ in respect of on and offshore business, that is, loan to a non-resident may be funded in a center's own market, may be funded in the center's own market where the supplier of funds can be resident or non-resident. Such offshore financial centers are also signified as international financial centers. Many countries, territories and jurisdictions have offshore financial centers. A more feasible way of defining OFC is that it is a center where the major financial sector activity is offshore on both sides of the balance sheet, where the transactions are initiated elsewhere and where the majority of the institutions involved are controlled by non-residents. Thus, OFCs are referred to as jurisdictions specialized in offering corporate and commercial services to non-resident offshore companies. Financial systems having external assets and liabilities out of proportion to domestic financial intermediation designed to finance domestic economies, and centers which provide following services: low or zero taxation, moderate financial regulation, banking secrecy and indistinctness. OFCs range from centers such as Hong Kong and Singapore having well-developed financial centers and infrastructure. Non-residents take large amount of value which is added to the transactions. But in case of small centers where there is a physical absence of financial institutions, the value may be limited to the booking of the transaction. However, all transactions may be more or less of an offshore type in all centers. It is quite possible to find transactions in all jurisdictions where only the booking has taken place in the OFC, while at the same time business involving much more value added may also take place. Offshore centers provide several services besides banking. These include fund management, insurance, trust business, tax planning, etc. For instance, offshore corporations or international business corporations, that is IBCs. IBCs are referred to as limited liability vehicles registered in an OFC. Their main emphasis is to operate business effectively by issuing shares, bonds or raising capital. They can be used to create complex financial structures. IBCs may be set up with one director only, but it is often seen that residents of the OFC host country may be regarded as nominee directors to conceal the identity of the true company directors. In most of the OFCs, the cost of setting up IBCs are minimal and they are exempt from all kinds of taxes. Thus, IBCs are termed as popular vehicle for managing investment funds. OFCs have a great variety ranging from those with regulatory standards and infrastructure similar to those of the major international financial centers such as Hong Kong and Singapore to those where supervision is non-existent. Many OFCs have been working to raise standards in order to improve their market standing, while others have not seen the need to make comparable efforts. There are some recent entrants in the OFC market who are deliberately making efforts to fill the gap at the bottom end left by those that have sought to raise standards. There is not hard and fast dividing line to define OFCs, particularly the various definitions can be outlined as follows. International financial centers. London, New York and Tokyo are considered as international financial centers. They possess advanced settlement and payment systems, thereby supporting large domestic economies. They are considered liquid markets where both the sources and use of funds are diverse and where legal and regulatory frameworks are adequate to safeguard the integrity of principal-agent relationship and supervisory functions. IFCs generally borrow short-term funds from non-residents and lend long-term funds to non-residents. London is considered as the largest and most established center, followed by New York. The difference between the two lies in the proportion of international to domestic business, which seems greater in the former. Regional financial centers. These centers seems different from IFCs. RFCs have established financial markets and infrastructure and immediate funds in and out of their region, but they have relatively small domestic economies. Hong Kong, Singapore and Luxembourg lie in the category of RFCs. Offshore financial centers. The third category describes offshore financial centers which are specialized in providing limited services. OFCs offer skilled activities which are attractive to many financial institutions. These centers are more lightly regulated, which provide services that are mostly tax-driven. But they have limited resources to encourage financial intermediation. It is often seen that many of the financial institutions registered in an OFC have little or no physical presence. Small countries accompanied with small domestic financial sectors generally choose to establish offshore business and become an OFC for a number of reasons. These comprise income generating activities, employment in the host economy, government revenue through licensing, etc. However, the most successful OFC such as the Cayman Islands and the Channel Islands depend on offshore business as a major source of both government revenues and economic activity. Let us now discuss about history of offshore banking centers. The maintenance of historic and distortionary regulations on the financial sectors of industrial countries during 1960s and 1970s was a major factor that had contributed to the growth of offshore banking and propagation of OFCs. By the 1960s, a full-fledged euro currency money market where euro banks played a major role in accepting deposits, lending funds in euro currency. The euro currency market boosted in the 1970s when advanced type of international banks originated that were different from the traditional banks or from the euro banks that came to be referred as offshore banking centers. Offshore interbank market started their operations in Asia after 1968 when Asian dollar market or ADM was launched by Singapore with the introduction of Asian currency units or ACUs. The ATM was considered as an alternative to London euro dollar market. Foreign banks were mainly enabled by ACU regime to engage in international transactions under a favorable tax and regulatory environment. In Europe, Luxembourg began attracting investors from Germany, France and Belgium in the early 1970s due to low income tax rates, the lack of withholding taxes for non-residents on interest and dividend income, and banking secrecy rules. Similar opportunities were provided by Channel Islands and Isle of Man. In the Middle East, Bahrain served as a collection center for nations' oil surpluses during the mid-1970s, after passing banking laws and providing tax incentives to facilitate the incorporation of offshore banks. Following the initial successes, many other small countries made efforts to attract this business, but most of them faced little success because they were not able to offer advantage over the established centers. By the end of the 90s, the attractions of the offshore banking changed drastically for the financial institutions of industrial countries as reserve requirements. Interest rate controls and capital controls reduced their significance while tax advantages remained influential. Some major industrial countries also started making similar incentives available on their home territory. For example, the US established in 1981 in major US cities the so-called International Banking Facilities or IBF. Later, Japan allowed the creation of an offshore market, that is JOM, with similar features. At the same time, supervisory authorities and tax authorities were adopting the principle of consolidation, which diminished the incentives for banks to carry on business outside their principal jurisdiction. This is because the relative advantage of OFCs for traditional banking has become less attractive to industrial countries, although the tax advantages for asset management appear to have grown in importance. Thus, OBCs propagated in those countries where there is a less interference of government regulations, low tax rates, good infrastructure facilities, good communication system, encouraging climate, etc. Now, moving on to functioning of OBCs. Offshore banking is carried out by branches and affiliates of banks incorporated elsewhere, mainly in major countries, but also in larger emerging market economies. It has become complicated for a bank incorporated in jurisdiction with limited domestic market to carry on business in other countries because of the failure of the BCCI and Meridian Bank. Banks are now supervised to open branches and affiliates to demonstrate their capacity for their home supervisor to exercise consolidated supervision, which is impossible to do for a bank whose business is carried out the home country's jurisdiction. The physical appearance of creation of foreign banks in OFCs varies. In some OFCs, they may set up, while in other cases, they may fund the business carried on their books. But in certain cases, little physical appearance is there and all business decisions may be taken elsewhere. Some developments are referred to as shell branches. Offshore activities may also take place through parallel owned banks. These banks are not considered subsidiaries of bank in the offshore center but have similar owners. Consolidated supervision is more complex in such cases. Offshore banks engaged in a variety of transactions, foreign currency loans and taking of deposits, issue of securities, over-the-counter trading in derivatives for risk management and speculative purposes, and the management of customers' financial assets. Foreign currency lending and its funding is considered as an asset-driven business which may set up in the OFC but sometimes set up elsewhere and funded in the OFC for tax purposes. Sometimes the office originating the loan makes arrangements for funding the loan, while sometimes it may be arranged by the entity in the OFC itself. A large proportion of Eurobonds floated in international capital markets is also issued in OFCs. But the marketing and selling of such instruments is carried out in major financial markets. OTC derivative instruments were mainly concentrated in new IFCs. Among IFCs, over-the-counter trading in derivatives have increased in the US IBFs, the JOM, and to a certain extent in OFCs with major financial markets. But on the other hand, in other cases, derivative transactions arranged elsewhere may be booked in an OFC if tax or other reasons make that more profitable. OFCs can be used for legitimate reasons, thereby taking advantage of lower taxation aspect and consequentially increased after-tax profit. Simple regulatory framework that reduce implicit taxation, minimum formalities for incorporation, proximity to major economies or to countries attracting capital inflows, reputation of specific OFCs, existence of adequate legal frameworks that safeguards the integrity of principal-agent relations, freedom from exchange controls, means for safeguarding assets from the impact of litigation, etc. OFCs can also be used for dubious purposes such as tax evasion and money laundering by taking advantage of a higher potential for less transparent operating environments, including a higher level of anonymity to escape the notice of the law enforcement agencies in the home country of the beneficial owner of the funds. Now let us discuss about a few advantages of offshore banking. The favorable tax rates in the offshore country promotes a healthy environment which attracts outside wealth. In simple words, offshore investment generally occurs when corporation is formed by offshore investors in a foreign country. No tax is imposed on the offshore corporation because corporation does not engage in local operations. Offshore financial centers are popular for restructuring asset ownership. Individual wealth can be transferred from people to legal entities through trusts, foundations, or through some existing corporation. For example, if US resident is considered as a trustor, this permits them to make contributions to their offshore trust free of income tax. However, the trustor of an offshore protection fund will be taxed on the trust's income even if that income has not been allocated. Most of the offshore jurisdictions offer the benefit of secrecy legislation. Many countries have enacted laws creating strict corporate and banking confidentiality. There are serious consequences for the offending party if the confidentiality is breached. Divulging customer identities is constituted as a breach of banking confidentiality. Offshore banking also assists in the establishment of diversified portfolio. Offshore accounts are much more flexible, thereby giving investor an unlimited access to international markets and to major exchanges. Now let us discuss about trends in growth of OBCs. The performance and growth of the activities carried by OBCs depend on the execution of public policies resulting from coordinated international efforts motivated by financial crisis 2007 to 2009 to redefine the rules of international financial system. It is known that London was the first place that operated with all the characteristics of OFC. Later, cities in all geographic areas of the planet started operating but always produced some variations. Although the functions performed by each OFC as a part of international financial system are not the same, but their relative model and their development process have been similar. Recently, a large number of offshore financial centers were established by European Union, thereby signing up to the European Union Withholding Tax and Exchange of Information Directive. Banks in certain jurisdictions which hold account for EU resident nationals must either deduct 15% withhold tax or permit full exchange of information with the country of the nation's residents. Withholding tax is to be split between offshore jurisdiction and the country of the account holder's residence. Among certain jurisdictions, Hong Kong and Singapore denied to sign up to the directive. On implementation, the directive recouped far less money than anticipated, although it is disputed whether this is because the regulations lacked effectiveness or because the predicted amount of funds in offshore bank accounts transpired to have been greatly exaggerated. Similarly, the widely predicted capital flight to Hong Kong and Singapore appears not to have materialized. In the 2000 report towards global tax competition, 47 jurisdictions were identified by Organization for Economic Cooperation and Development, that is OECD, as tax havens, which are based on the existence of preferential tax regimes for financial services and the absence of procedures for tax information. Between 2000 and April 2002, 31 jurisdictions made formal commitments to implement the OECD's standard of transparency and exchange of information and were removed from the list of tax havens. On the other hand, Andorra, Liechtenstein, Liberia, Monaco and Marshall Islands, Nauru and Vanuatu did not make commitments to transparency and exchange of information at that time. These were all identified in April 2002 by OECD's Committee on Fiscal Affairs as uncooperative tax havens. All of these jurisdictions took a reverse position and were no longer deemed tax havens. After G20 meeting, leaders decided to crack down on tax havens. In 2009, a list of countries had been published by OECD which still required implementing internationally agreed tax standards. In May 2009, OECD's Committee on Fiscal Affairs made efforts to remove all three remaining jurisdictions, that is Andorra, Liechtenstein and Monaco, from the list of uncooperative tax havens, accompanied with their commitment to implement OECD standards of transparency and effective exchange of information. Thus, no jurisdiction is currently listed in an uncooperative tax haven by the Committee of Fiscal Affairs. Within the objectives of Global Plan for Recovery and Reform presented at the G20 meeting, those which are focused on financial system, regulation of the financial sector, global trade and investment are the ones that will be directly affecting the international financial centers and offshore financial centers. Actions will be taken against those jurisdictions which do not meet the international standards in relation to tax transparency. It was agreed to counter some measures for countries to consider, such as increased disclosure requirements on the part of taxpayers and financial institutions to report transactions involving non-cooperative jurisdictions, withholding taxes in respect of a wide variety of payments, denying deductions in respect of expense payments to payees resident in a non-cooperative jurisdiction, reviewing tax treaty policy, asking international institutions and regional development banks to review their investment policies, and giving extra weight to principles of tax transparency and information exchange when designing bilateral aid program. By reducing the cost of transactions and bureaucratic red tape, the functioning of the OFCs can contribute significantly to the world's economic recovery. Also, the role that OFCs can play if they specialize in dealing with toxic assets for rest of the world may represent a long-awaited escape valve that will conduct to more liquidity and objective valuation of those securities. Now let us summarize what we have learned from this module. The term offshore financial centers originated in 1980s, which is defined as a country or a jurisdiction which provides financial services to non-residents that is inconsistent with the size and financing of its domestic economy. Offshore centers provide several services such as banking, fund management, insurance, trust, business and tax planning, etc. Many countries, jurisdictions and territories have offshore financial centers. The main offshore centers include Bermuda, British Virgin Islands, Cayman Islands, Luxembourg, noted by IMF and OECD. Bahamas and Panama are the offshore centers specialized in certain niche markets. Offshore financial centers can be outlined as international financial centers and regional financial centers. By the 1960s, a full-fledged euro currency market had been created as an international money market where euro banks played a major role in accepting deposits, lending funds in euro currency. The euro currency market boosted in the 1970s when advanced type of international banks originated that were different from the traditional banks or from the euro banks and that came to be referred as offshore banking centers. OBCs propagated in those countries where there is less interference of the government regulations, low tax rates, good infrastructure facilities, good communication systems, encouraging climate, etc. Functioning of OFCs is generally carried out by branches and affiliates of banks incorporated elsewhere, mainly in major countries but also in larger emerging market economies. One of the areas where OFCs are experiencing more international pressure as part of the recent initiatives is an area of tax shielding relating transactions. Thus, OFCs can contribute effectively through its functioning by reducing the cost of transaction and bureaucratic red tape. Bureaucracy is like oxygen to OFCs. The more there is, the more the opportunities that exist to provide safe havens for those fleeing it.